Welcome again to this journey of demystifying the derivatives market. We looked at the cost of trading in derivatives, and what really came out that derivatives, the cost of derivatives is several times cheaper than trading in the real market or the actual spot market, like this, the stock exchange or the bonds, government bonds exchange. So I have a feeling that we still, because this is a very new concept, there's still a few people out there who are still trying to grasp this concept of derivatives. I want us to step outside the normal mainstream markets, the equities market, and maybe give examples that, you know, someone who is a farmer, someone who has nothing to do with the financial services sector can be able to relate to it. What examples come to your mind of that can help us to demystify this derivatives concept further?
Yes, I think the derivatives is something we live with every day.
Yeah.
Only that we've never been able to bring it together or capture it. Today, we have products that we use, and I would like to take you to a product we were discussing offline, like the meat.
Yes.
So we buy meat. I can tell you certainly, I don't know what the price of meat is tomorrow.
Yes.
There's no predicted certainty that meat will cost, say, 300 shillings a kilo.
Yeah.
So how the derivatives work, depending on what I've had, if I assess and see there's going to be an oversupply of meat, say in about a month's time, then I know the value of meat is going to come down. So what do? I buy a sell contract.
Yeah.
I'm not in the meat business.
Yes.
But there's somebody who has told me, Jeff, we want to now have a market of the meat business, but reference to meat.
To the meat.
So I'll buy the meat contract, a sell contract, whose value increases as the value goes down.
Yes.
But on the opposite side, I've got Pious company who believes that this news about meat, supply of meat coming through, is really
temporary.
It's temporary.
Yes.
And meat has always been known to increase because people are becoming meat eaters.
Yes.
And so you buy a contract because you know the value of meat is going to go up. So you take the opposite of what I take.
I believe the value of meat is
going to go up.
And you believe the value of meat is going to go down. So you have opposite opinions.
Yes. So as the value of meat goes down, the value of my contract improves.
Yes. So you're in the money.
I'm in the money.
Yes.
If the value of meat then goes up, the value of your contract improves.
I'm in the money.
You're in the money.
You're out of
I'm out of the money.
Yes.
Because now it's taken the opposite direction.
Absolutely.
So that's essentially how it works.
Interesting.
So I don't have to be in the trading of meat business to really enjoy the benefits of that business.
Yes.
I can be out of it.
Yes.
Because what you're trading is referenced to that business.
So what I hear you saying, the derivatives market is going to enhance creativity in the financial services sector.
Yes.
And for example, I know one of the things that we always talk about is the price of unga.
Yes.
And maybe we didn't have adequate rainfall this year.
Correct.
And therefore farmers did not harvest enough maize.
Yes.
And therefore we expect undersupply of maize. And the price of maize meal or packet of unga in the supermarket is most likely to be high. So you take a view now. We can draw back. We can trade based on that information.
Based on that information.
Because there are people who may take a view. The government of Kenya is going to import a lot of maize to counter that.
Risk.
But I'm still convinced that the price of maize meal is going to go up. And you are convinced the price of maize meal is going to come down.
Correct.
And so we enter into a contract. I'm on the buy side, you're on the sell side.
And we have a time limit.
We have a time limit.
Say it's 3 months.
Yes.
Whoever at the end of the day
Yes.
has made the money,
Yes.
gets the money. Whoever
Yes.
has lost the money,
Yes.
and loses the money.
Yes.
So the good thing with derivatives, you can create, it can be referenced on different things.
Different assets.
Different assets.
Underlying assets.
Even today, if we wanted to trade on an international stock, like say Google,
Yes.
we don't have to buy the Google stock. We create a contract here
Yes.
that's referenced to Google.
Yes.
So if you are of the view
Yes.
that what's happening in the global market is
Yes.
going to affect the value of Google,
Yes.
I take a sell contract.
Yes.
And somebody else can say Google is still acquiring
Yes.
different platforms.
Yes.
And I don't know which is the next one.
Yes.
Instagram 2 or something.
Yeah.
It's going to go up.
Yes.
Then you buy a contract on Google
Yeah.
stock.
Yeah.
And we say, let's take a view for 3 months.
Yes.
And that's it. So at the end of 3 months, if the global economic affects the price of Google and they go down,
Yeah.
I'm the selling contract. I'm in the money.
Interesting.
You had a buying contract, you're out of the money.
I'm out of the money.
So we'll be able to create different opportunities for different people.
So product
Yes. Innovation is going to be
just going to be spurred because of
Yes.
the derivatives exchange.
yes. And you'll be able to get the benefits of global economic scales
Of anything.
Of anything.
Of anything. You
Of
can get
anything.
exposure on anything.
On anything.
Amazing. Amazing. I mean, when you say that, it sounds so simple.
Yes.
Why haven't we done it?
I'm encouraging, especially the youth who are currently very busy in other assets,
Yes.
to just take a position in this market and try to learn it.
Yes.
Yes, it's all about education.
Yes.
Yeah, so take a view and go and sign up
Yes.
and start trading in small amounts.
Yes.
That will help you build knowledge.
I
Because
see.
there's nothing as good as experience.
Yes.
Yes, that's why they say you must have experience, because
Yes.
you experienced it.
Yes.
If you read it without experiencing,
Yes.
you'll never really understand it in a better way.
I see. So
And that's why we brought very simple products.
exactly.
What we brought are what we call vanilla.
Exactly.
Simple products for you to understand.
Exactly.
We can, in the future, one day have more complex
Yeah.
products. But these are the basics that we think is going to help education.
And that's exactly the main point that I pick. This is just the beginning. This is just the beginning. We are in the simplest form of derivatives.
Yes.
And what is coming, we are likely to have a very huge market. We've just flung open
Precisely.
a very huge door
Yes.
of product innovation.
This opens product innovation. It's going
Yes.
to bring in investment banks and investment houses like Number Capital
Yes.
to be more innovative, to employ very innovative staff
Yes.
to come up with very unique products.
Very unique product.
Because we want to make it a demand-driven product.
Absolutely.
So now we'll come and tell us, Jeff, I've done my research. This is a product we believe will
Yes.
build the market.
Yes.
Is it possible for us to create and issue it as a contract?
Yes.
And then we'll analyze it, work together with the market, carry out study, and issue it. So it's a lot we can do. It's a lot.
Thank you so much, Jeff.
Welcome.
You've heard it. This is just the beginning. We are just opened a very big door to product innovation. Stay tuned in as we continue demystifying the derivatives market.